Hello, I'm Alex, the Bacano insurance journalist. I like a lot of things in life, but what I really enjoy doing is saving you money on car, life, health insurance, you name it, any form of insurance we can save you money on. Let's make it happen. I want to talk to you today about a topic that really resonated with me, a topic that hit home. It was one of those topics in which a person asked a question and said, I'm getting a better rate, a better price for health services if I pay out of cash as opposed to just using insurance. Now, the cost difference here, are you ready for it? We're talking about 30%, 25% savings. Let's talk about why that makes sense or why it doesn't. Now, there are instances in which health insurance companies and medical providers are kind of looking out for their best interest. And now this situation that we're talking about, in which the person is seeing a significantly cheaper price for paying out of cash as opposed to using their insurance, is an example of just that. We're talking about a medical provider, whether it's an emergency room, an urgent care place, a hospital, a specialist, you name it, that is seeing the possibility of getting compensated immediately by taking a cash or credit payment, as opposed to having to go through the process of putting in claims or documents or whatever it may be with the insurance carrier, and then going through their internal processes of being reimbursed for all that. Now, in order to guarantee that payment immediately, they have to kind of reel in the person and say, hey, look, we'll give you a significantly lower cost for receiving the service. Normally, this doesn't make sense. The reason it normally doesn't make sense is because, imagine, if you will, you have a deductible. Let's say your deductible is $2,000. That $2,000 deductible that you have is gonna be for that year. And now you receive the service at, let's say, $400. That service at $400, even though it seems like a massive amount, is working toward that deductible, assuming that you put it toward your insurance. So you pay the $400, you have a $2,000 deductible, that leaves you with about $1,600 remaining toward that deductible. If you keep incurring medical costs throughout the year and you get to that point where your deductible is met, the insurance company is going to start paying out of pocket. So that is why it doesn't make sense to take that cheaper payment, because if you're close to the deductible, then you're going to forego getting to that deductible. You're going to forego the insurance company taking on 80 or 90 or 70% of the true cost of healthcare for the sake of saving whatever amount, 30% or 25% of that cost. Now, here's something I'm going to tell you that very few other people tell you. There's times that taking that cash payment makes all the sense in the world. Let's say that your deductible is $2,000 and now you're in November or December and you know for a fact that you're not gonna make the rolling deductible. You're not gonna make that cutoff to receive services no matter what you do. In this instance, take the lower cash price if you have it and pay for it right then and there, because you're not gonna make the deductible. It doesn't make sense to take on the higher cost onto yourself if there's no insurance backing you up in about a month or so, because the deductible will reset and you'll be facing that $2,000 amount all over again. I have a vision, and the vision is this. I wanna see that investments that you or I or any one of us have are able to cover our health insurance costs. Now, there are special accounts known as health savings accounts that are constructed especially to use pre-tax dollars to go ahead and pay for our health costs. Now, imagine, if you will, that these health insurance companies and carriers are crushing it. Their returns, get this,
are 30, 25% returns
over the last year or so, meaning that their return has significantly outpaced the S&P 500, the NASDAQ, you name it, even during the most tumultuous of times. Take a look at a video I made earlier that is a must watch that explains exactly what this looks like and exactly why you should start moving to having exposure to those companies within your investment accounts, but also within your health savings accounts if possible, to make sure that you're outpacing inflation, and in the case of health savings account, are able to use that growth to then pay for your costs for healthcare as opposed to having to bear the burden the entire time. If you like the video, go ahead and make sure to comment below sharing your experiences with health insurance, with health payments, with these type of cash discounts, and whether they worked for you or not. Additionally, make sure to like and subscribe to this channel because it helps us grow. As always, take care of yourselves. Till next time, stay blessed.